This is the briefing for Friday, April 14th. I want to start the briefing tonight with a weekly chart of the spiders, and I want to go through the Qs and the Russell as well. I think this is important to keep in mind what's happening in the greater degree time frame. Now, you can see this rotational pattern of the spiders, for quite some time. This is a weekly chart, so each candle is a week. So this goes all the way back to December 2nd, so the first part of December, and you can see the rotational pattern. Now, each time we've approached this 410 to 412 area, price has been rejected. Now, you can see here, this is 3 weeks that it attempted to trade through and continue higher above this 412 area, above the 412 area. And then we got the sell-off. Then we're back now, and here we are 2 weeks, and you could even include this because it could not get through that week. But here we are at least 2 weeks at or around this 412 area once again and unable to break through. The key here, I believe, is what's happening with volume. And you can see this is volume on the spiders, and you can see what's happening there. Now, we did have a tick up in volume this week, and I believe that was a result of the CPI numbers that came out. The other important aspect from a longer term perspective is this rally here going right into important resistance is being done on collapsing breadth. So you can see even today we finished the week with negative 940 shares, more negative than positive in the NYSE. I want to change this to the Qs. You can see basically the same thing is occurring here, and you can see that rotational pattern. Now the Qs are a little bit stronger, 3 weeks just above this 300 area. Next upside resistance is going to come in right around the 335 to 340 area, and you can see the same thing is happening here. Volume falling off in the Qs with a slight tick up this week in volume, but NASDAQ breadth falling off once again. And if we look at the Russell, you can see the rotational pattern for quite some time. I mean, this goes all the way back to October. No, I'm sorry, that goes back to June of last year. And we've not really gone anywhere. We're just in a rotational pattern. Very difficult market to trade. Now, I want to bring this back down into a little bit shorter time frame, looking at a daily basis. So here's this 410 up to about the 412, 418 area. Look at this. This is 6, almost 10 days of trading at and around 410. This is a day, today's trading, you can see the buying tail that came in here and the selling tail that came in right there. That was a day, or today's day was that where neither buyers nor sellers could gain control of the market. Once again, you can see the divergence in market breadth. You can see the higher high on yesterday and then a higher high today, and market breadth is just absolutely continuing to decline. So previously we had a little bit of strengthening in some of the internals in market breadth, but now it's changed and we've got a clear divergence in what's happening, plus the intermarket divergences that I explained in just a little while ago. Now, looking at the Qs, you can see the same thing. Look at this rotational pattern, 6, 9, 10 days of trading right around this important 318 to 320 key reference area, unable to break out, at least at this point in time. Volume falling off on a daily basis, NASDAQ breadth collapsing as well. So the market is not strengthening, and I've said in the briefings earlier this week that one of my biggest concerns is what's happening with volume. In order for a trend to be healthy, volume is the gas that drives the trend. Now, certainly in looking at the stock indices, because they're made up of various different components and with different weightings, certainly that has an aspect to it, and that's why we look at market breadth, because that gives us an indication of whether we're seeing more stocks being traded higher or more stocks are being traded lower. And you can see even closing today's trading in the NASDAQ, we were negative 1,502 shares. Let me go back to the spiders and check that. Yeah, 940 shares negative in the spiders. It's clear divergence in what's occurring. Previously, it appeared that the indices were beginning to strengthen, but as we came into the end of this week, that's simply not the case. This is uh, volume on the IWM representing the Russell, and you can see this is absolutely ridiculous how volume has just fallen off. This is Russell breadth, and you can see it is declining as well, negative 1,000 shares for today's trading. Can't get through this 178 to 180 area. This is going to be very, very interesting if and when it does. If not, if it can't get through, the longer that it retains around a key reference area or around uh, support or resistance, in this case resistance, the higher the probability you're going to see some type of reversal, because traders, unless there's a news event, will realize there's not enough strength to drive price higher, and they will begin to sell or begin to short. So here you can see we've spent 4 days around this key reference area and unable to break through, at least at this point in time. You can see even here we spent 3 days right at this key reference area, and then we've got this sell-off here as well. So it's going to be very interesting. Now, for trade location, you can see the rotational pattern here. 4 days of trading. So certainly you want to consider being long above 178 to 180 in the Russell and short below about 175. And then you can see where the support and the resistance areas are on a longer term basis. In the NASDAQ, these pauses are just really important. And you can see right about the 312 area up to about the 320, 21 area is the areas for trade location. Then we'd have to look at a longer term chart to see where the next upside resistance is, but support comes in right around the 300 level, and that's a very important area there as well. And going back to the spiders, you can see spiders showing a little more strength than the other indices, but really the high from today, which is around 415 down to about the 405 area, is going to be your next level of support in the spiders. Looking at where we are in terms of overbought and oversold, we're really not oversold as of yet, approaching oversold, but really not there as of yet. So it's going to be important to see what happens on Monday at Monday's open, especially if we see any additional downside. Now, looking at volume, this is total volume on the NYSE, and you can see how it is collapsing as well. Total volume on the NASDAQ, it's collapsing also. Had a little bit of a tick up for the last couple days, but it stayed within trend, and now we've got a turn down in volume also. Want to look at the chart of the indices. This is a chart of the indices on a 30-minute basis. This is the spiders, the Qs, and the Russell and the IWM. Now, you can see just on a 30-minute basis how choppy this market has been. I mean, it's almost like you could take an opposite position as to where the indices closed on the previous day. So you could have shorted up here and rode this down to here. You could have bought there and then rode it back up again. Now we closed in the middle of the range, so that really wouldn't work. But if you look at where we are in extremes at the end of the days, that does suggest that this is a very choppy market, and the market is unsure of whether value is higher or lower, at least at this point in time. Now we got more earnings coming out next week. That certainly can have an influence on the determination of value, but we just have to wait and see what happens. The most important thing that we're looking at right now is what happens outside of this area of rotation. If we have a break to the upside, then you want to make sure that volume is increasing on that breakout, because if it's not, it's going to be a false breakout. You're going to see rotation back through the range, as we've seen on all of these days so far. If we do see a breakout to the downside, the same thing is valid is that you want to see volume increasing. Otherwise, it's a false breakout to the downside, and you're going to see rotation back up through the range. We really need to see a break outside of this range in all of the indices. Going back to the Qs, the same thing here. We really need to see a break out of here. It's very, very difficult to trade a choppy market like this. And I'm just looking forward to some type of a break. And when we get that break, you just need to see a confirmation that the internals are confirming that that breakout is strengthening and it's not a weak breakout that would be retraced completely. Have a great weekend. I'll pick this back up on Monday for subscribers. Have a great weekend.